This is the Asia Trade. I'm Sherian in Tokyo.
And I'm Paul Allen in Sydney. The top stories this hour. Oil edging lower as President Trump extends his deadline for Iran to strike a deal with the US by 10 days. He says talks with Tehran are going very well. Asian stocks set to fall as traders assess the US extension. Tech also in focus after Google touts a memory breakthrough. And coming up in our latest episode of Bloomberg Tech Asia, a look at who has the edge in the AI arms race. Drone Shield and Sakana AI join us to explain how AI can be deployed in defense tech.
Paul, take a look at how we're setting up for the Asia session. We could see some risk off, especially after the S&P 500 fell to the lowest levels since September. You can see U.S. futures under pressure even early in the Asia session. We saw those memory stocks falling in the overnight session, as you mentioned, from that breakthrough from Google that could see lower demand for memory chips. So we'll be watching the likes of Kioxia in Japan, Samsung, SK Hynix in South Korea, in a region that's already contending with elevated energy prices. Yes, you said it. I mean, oil is gaining ground, falling a little bit right now early in the Asia session, but we saw a surge in the overnight session. And investors still cautious, trying to understand the conflicting messages coming about the progress in the Iran war towards a ceasefire. So we're seeing the Nikkei futures at the moment pointing to some upside, but after falling in the previous session. And we're continuing to watch the Japanese yen because it's very close to that 160 level against the greenback. We're watching the Kospi also futures finish to the downside of more than 3%. We're watching those tech names. We're also watching the Korean won at the weakest level against the US dollar since 2009. And we are now seeing really yields continuing to rally higher, inflation concerns. For example, here in Japan, the 2-year yield at the highest level in more than a decade. So we'll be following those expectations about BOJ rate hikes because also, Paul, in Australia, we continue to see that repricing of rates higher.
Yeah, you mentioned the oil price there, Sherry. Let's take a look at what's going on here. We've got WTI slipping a little bit, 93.20 at the moment, but we've got Brent still holding on pretty high there at 108. That was its last traded price as well. We've just opened for trade here in Australia, also seeing a little bit of weakness on the ASX at the moment. We're off about 0.5%. But if you look over the course of the week, we're actually higher week long, but we'll see how things wrap up by the end of today. Best performing stocks in Australia right now, Karoon Energy, Beach Energy among them. Also Treasury Wine Estate, surprisingly, up by almost 2%. I guess we could all do with a stiff drink after the events of the past few days. We're hearing from a number of Fed speakers as well, Sherry. Just want to quickly get you across some of those remarks. The Vice Chair, Philip Jefferson, has been making some remarks in a speech in Dallas. He says elevated extended energy costs could push up other prices. Surprise, surprise. Inflation impact of energy prices, though, he says, remains relatively modest so far. We've also heard from Fed Governor Stephen Meyer, and he's taking questions at a Miami event at the moment. He still sees underlying inflation moving towards 2% over the next 12 months. So a somewhat optimistic outlook there, Sherry.
Yeah, we'll also be hearing from Fed Governor Michael Barr this hour, so plenty of Fed speak to digest at a time when we're trying to really understand what's happening with the Iran war. President Trump extending his deadline for Iran to strike a deal with the U.S. or face more attacks. He's given Tehran 10 more days, offering a brief calm to global energy markets.
They are begging to make a deal, not me. They're begging to make a deal. And anybody that saw what was happening over there would understand why they want to make a deal. They are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that.
Let's bring in our Washington Deputy Bureau Chief, Laura Davison. And Laura, President Trump also saying that the talks with Iran were going very well. Do we have more insight into the state of negotiations? Because last time we heard, we weren't really quite sure who the U.S. was speaking to.
Yes, Trump has sort of said two things today, both that negotiations are going well and also that negotiations aren't going well. He started the day sort of with more threatening language, saying that, Iran better get serious, and, even suggested that the U.S. at this point might not be willing to make a deal. But just hours later, he pivoted, saying that talks were going really well, and in fact was going to grant another 10-day extension to allow more time for talks. Just to kind of catch up, we had sort of a 2-day deadline he gave Iran to make a deal before striking energy sites, then 5 days, which that's the period we're in now, and then sort of even before that 5-day deadline is up, he added another 10 days to that timeline. So it's clear that Trump, is is not looking to make some of those more preemptive strikes on energy infrastructure in Iran. But it's still not clear exactly what's happening with these talks. Iran has continued to deny that there are direct negotiations happening. The Wall Street Journal also just reported contradicting Trump, saying that mediators in these talks have not said that that Iran asked for this extension. In fact, this was Trump's idea, whereas Trump said that it was Iran who asked for this 10-day extension. Or rather, they asked for 7, but he gave them 10 to be nice.
Laura, can you update us on the state of shipping in the Gulf of Hormuz at the moment as well? Because the Treasury Secretary, Scott Bessent, says an insurance program to boost shipping through the Strait is on its way. What more do we know?
So there's a handful of ships that have been able to pass through. These are ships that generally have stronger relations with Iran. There was an Indian tanker, a Thai tanker, and Iran is actually looking at formalizing a program that would allow certain ships that they approve to pass through, many of them paying a rather large fee to the Iranian government to be able to do so, as long as their crews and their cargo check out and align with the regime. The U.S. for several weeks now has been talking about a program backed by a U.S. government agency that would give additional insurance to ships that want to pass through the Strait of Hormuz. The real question, though, is shippers have said that the insurance is not really the issue. I mean, that's just one of many issues, but it's more so just the danger, the loss of life, the potential for mine attacks, drone attacks passing through, and that it's just not safe, and no amount of financial insurance will make that possible.
All right, Bloomberg, Washington, Deputy Bureau Chief Laura Davison there. Well, markets are assessing President Trump's extension to Iran, but tech is also weighing on investors' minds. Let's get to Garfield Reynolds now, who leads our Bloomberg MLive and Asia coverage. Garfield, as if the gyrations of the oil price weren't enough, we've got some major tech moves happening out of the US as well.
Yeah, well, actually, the reaction to the Google announcement kicked off yesterday in Asia, when we had some declines in Hong Kong tech shares and in South Korean ones. And this is, if we didn't have the oil war, the oil crisis going on, this is a continuation of the back and forth we'd seen on the AI trade over the previous 2, 3, 4 months, where yes, there's huge demand, but there's the ongoing potential that at any given moment, a technological development could leave investors regretting some of the hype that they've succumbed to when it comes to some of the suppliers for parts of the AI spectrum, and that's what's going on here. Unsurprisingly, somebody is seeking to come up with technology that would reduce how much memory needs to be used in order to run the plumbing for AI, so to speak. Now, SK Hynix, Samsung Electronics, others, they've been huge outperformers until the war, even within the war to some extent, because of the expectation that they will benefit very strongly from their role as producers of memory chips, which are part of that architecture. So this is a reduction in that. It's kind of what, as I said, is what you would expect outside of the war going on, and it's something for tech investors in particular to keep in mind, that you never know when something's going to come along and eat your favorite stock's lunch.
Yeah, I mean, you put it in a very funny way, but it's true. I mean, we have seen so many concerns around this, and it was just a matter of time for these cracks to really emerge, right? We're seeing in the private sector as well, where we continue to see these redemption requests that are not necessarily happening. Isn't this a safe haven trade, and yet at the same time we have Treasury selling off?
Yeah, well, I mean, there are no real safe havens right now because nothing is all that clear. Maybe, I mean, you may well get some investors thinking the safest haven is to invest in the energy sector, because the likelihood is that even if there is peace, and there's no real sign that we're anywhere close to peace, but if there is peace, then sure, crude oil will come back down. But will it come back down to anything like where it was before the build-up, for the war? Aren't we going to face shortages and concerns about shortages? So there might be a move there. the US dollar has been seen as a haven. Be interesting to see in the coming weeks if we see gold come back into that picture. Ironically, because we had Turkey selling gold overnight, which sounds like an abandonment of it as a haven trade. But if you think about it, it actually underscores why central banks have been wanting to diversify into gold, and Turkey using gold mostly in order to carry out FX swaps. That's exactly why a central bank would want gold. So you would expect once this passes, Turkey will start buying back gold to rebuild its reserves. So, as you can kind of get from me going through those, there are maybe some havens out there that people might look to, but none of them look particularly sturdy, with the possible exception of the US dollar.
Jeffrey Reynolds, good to have you with us. He leads our Bloomberg and Live Asia coverage as we continue to digest the market gyrations and, of course, the latest comments coming from the Fed Governor Michael Barr as well, dropping on the terminal saying that they have particular concern for long-run inflation expectations and low hiring levels leave the labor market vulnerable to shocks, and that an extended war in Iran could have broad impacts on prices and the broader economy as well. We have more ahead. This is Bloomberg.
في عالم الأسواق كل ثانية تخلق فرصة جديدة.
سنكون في متابعة دقيقة ومستمرة في السوق السعودي وأيضا الشركات المدرجة وفي أبرز توصيات المحللين.
وكل تغير يترجم إلى أرقام.
نفصل الآن تحركات مؤشر تاسع، اقتربنا من إغلاق هذه الجلسة.
في أسواق الشرق نأخذكم إلى قلب الاقتصاد السعودي.
استقر معدل التضخم في السعودية خلال يوليو الماضي عند 1.5%.
نغوص في تفاصيل سوق الأسهم ونرصد تحركات القطاعات القيادية لحظة بلحظة. نراقب إغلاق السوق السعودي وما يكشفه من مؤشرات جديدة.
ننتظر إذن أيضا قرار خفض الفائدة كيف سينعكس في الفترة المقبلة على السوق السعودي.
نتابع توصيات المحللين وتوقعات ونتائج أعمال الشركات على مدار العام.
من الرياض أنا عبد الله السبيعي، أهلا بكم مشاهدينا.
أنا الصحة الميزاري كذلك، أرحب بكم باستديوهاتنا في دبي.
أسواق الشرق من الأحد إلى الخميس 1:30 بتوقيت السعودية على الشرق.
We don't know what we don't know. I mean, we don't know how much longer this conflict will last. We don't know how much worse it could get. And I mean, there is significant downside risk, but there's also upside risk or upside opportunity. I mean, things could turn out better than what we're fearing.
It's OECD Secretary General Matthias Cormann there. Joining us now is Karen Manner. She is Vice President and Investment Director at Federate Hermes. Karen, thank you so much for joining us today. And I do want to start on Matthias Cormann's remarks there about inflation. What's your inflation outlook globally and for the US? Because it's looking somewhat bleak at the moment.
Thank you, Paul. Nice to see you. It's definitely a bleak picture for inflation, and I think incredibly difficult for many of us in the market, and then when we even consider our own wallets, to experience inflation like this. First, by the pandemic era, supply chain issues which led to price increases, and then tariffs last year, and now really a scourge and a push on inflation from energy. So we're thinking that, of course, inflation is elevated, but as everyone says, it's going to be about the tenor of this conflict and the ultimate outcomes. We can live through and endure this inflation if it's short run. If this continues on for an extended period of time, it will make inflation higher and a very difficult condition for markets and consumers.
Yeah, I guess that's the great unknown here, is how long it's going to last. We've just heard some remarks from the Fed, Stephen Myron, suggesting, well, look, over 12 months, he still sees inflation coming in at 2%. And I hesitate to use this word, but could this all be transitory?
Oh, that's an awfully bad word in our markets, Paul, and one that we don't ever want to hear again, because it hasn't ever proven to be transitory. It's almost a hex on the markets. But the math that supports a nice path toward 2 would be a real cooling on the service side of inflation. That side of the ledger, if we have services and then the opposite being goods, service has been really held up by those annualized cost increases related to insurance, things that renew annually. So those are aligned to perhaps cool later in the year. And you can do the math where if this is a short-lived conflict and we get resolution and energy prices come down to closer, they won't go down to back exactly where they were at the end of February, but close, not in this one neighborhood of 100, you can do the math and perhaps get to closer to 2%. But it's going to take some effort to get there and a resolution to the conflict.
Karen, so let's assume the worst and say growth stalls, the stagflation risks now are growing. What are some of the assets broadly in the markets that could potentially hedge for this stagflationary environment?
Very, very difficult condition for markets would be stagflation. I think what we're seeing here now is with the inflation being priced in, and I think it's a little aggressive, particularly in the U.S. Treasury market. The market was ahead of its skis at the end of February, expecting 2.4 cuts over the balance of the year when the Federal Reserve had always indicated that it would be closer to 1. That's a pretty disparate forecast. And now for the markets in just over a week to price in perhaps a hike is going a bit too far. So to hedge that, you want to use income. So corporate bonds here, particularly investment grade corporate bonds, are a nice way to secure that income and act as a little bit of a fixed income hedge in this market.
When it comes to the Treasury space, we have seen yields really track closely with oil prices since the war in Iran began. But at the same time, we're seeing losses. Recently, the auction space hasn't been great either. What are your scenarios for how the Treasuries markets could move from here?
Well, we saw earlier in the week when we began to learn that we could have resolution and conflict over. But then what we saw was real confusion in the headlines now, and another sort of deadline that's been pushed out, which makes the markets confused. So, of course, it stands to reason that an end to the conflict would make the Treasury market rally with yields going down. Any information here is helpful. But with that run up in rates, that backup in rates at the short end of the curve, the 2-year is up over 50 basis points. You can see where nice money could be made if we do get a resolution and Treasuries know how to price and the rally begins and Treasury prices correct themselves. You could have a really nice play there in the 2-year part of the curve.
Karamana, really good to get your insights. Vice President and Investment Director at Federated Hermes. More ahead on the Asia trade. This is Bloomberg.
President Trump says he will sign an order to pay Transportation Security Administration officers during a partial government shutdown. Bloomberg's Nora Melinda joins us now with more on this. So, Nora, President Trump said he would sign that order to pay TSA workers to alleviate some of this disruption that we're seeing at U.S. airports. What more do we know?
Well, President Trump announced this in a social media post this evening, New York time. He essentially is saying that, quote, he wants to stop the Democrat chaos at airports. As we know, this is a partial government shutdown that's lasted about 41 days. And we're still seeing a lot of the fallout as people really assess what this means for the future. But this is an interesting development based off of the fact that we do know that TSA workers that tend to work with you as you're going through through the airport. They have not been getting paid, and so many TSA workers have either been calling in sick or not showing up to work at all. We actually saw airports seeing their longest wait times in history, Bloomberg reporting that yesterday. So this is an interesting development that we're seeing here.
So even if President Trump had the authority to resume TSA pay with his own executive order, where does the money come from? Because the whole point and issues with TSA was because DHS funding was halted because of issues with immigration control and ICE.
Absolutely. We really haven't seen a resolution as we think about the back and forth between Democrats and Republicans as it already relates to funding. So it's actually a bit unclear as to whether or not President Donald Trump actually has the unilateral authority to make this happen, especially because it would be essentially bypassing or circumventing Congress. And so we'll have to see, because they typically are the ones, of course, that weigh in on any sort of federal spending. So unclear right now where the money would come from.
So, Nora, what's the impact been at airports on the ground in the middle of this turmoil around the partial government shutdown?
Right. As I was saying, incredibly long wait times, the longest wait times in history that we've been seeing here, Paul. We've seen so many videos of lines just wrapping around nonstop for hours on end. So people are really just thinking about what this means for the future, especially given the fact that there have been a lot of snags as it relates to travel just on a national basis here. So any sort of resolution, everyone's sort of sitting on the edge of their seats waiting for one here, Paul.
Yeah, especially coming up the travel season in the summer, right? Bloomberg's right. Nora Melinda in New York. Great to get your reporting. And here are some of the other global headlines that we're following. Nicolás Maduro has appeared in the Manhattan federal court as the U.S. pushes ahead with a broad drug trafficking, narco-terrorism conspiracy case against the ousted Venezuelan leader. Prosecutors claiming he played a key role in the conspiracy to traffic cocaine into the U.S. and partnered with groups designated by Washington as foreign terrorist organizations. Maduro has pleaded not guilty. Canada is pushing for a de-escalation of hostilities in the Middle East at a G7 meeting in France. As Foreign Minister Anita Anand says, Ottawa wants to make sure that there is an exchange of views from all sides, but she also reiterated that Canada has no intention to participate in the offensive action.
We are very much focused on ensuring the continued dialogue, and I indicated that Canada wants to play a role in this diplomacy to work towards the preservation of civilian life.
Take a look at the market reaction in currencies, because we had seen the U.S. dollar supported in the overnight session. Stagflation risks really giving the dollar a little bit of a boost. It was actually the best performer among G10 currencies in the overnight session. We have already heard from Goldman that recession risks have risen to 30% over the next 12 months. You can see the euro now holding steady, gaining a little bit against the greenback. 115 is the level. Nomura actually expects euro-dollar weakness to persist for the time being. Of course, we continue to digest the latest headlines around the Iran war and what that means for implications around risk assets. The Japanese yen very close to that 160 level against the U.S. dollar. Investors here in Japan also turning cautious over those conflicting statements coming about the Middle East. So, Paul, we have seen here in Japan, for example, short end yields at multi-decade highs. In fact, a two-year yield at the highest since 1996. Given that more market participants are pricing in a BOJ rate hike, more than 60% see a chance of a rate hike in April.
Let's take a look at how commodities are performing as well. I mean, particularly oil. There is so much about the oil story at the moment. We have seen prices for WTI slipping, and you can see their New York crude prices a little bit lower there, 93.41 at the moment, although Brent last traded still healthily above the $100 a barrel level. President Trump has, of course, as we've been discussing, extended the deadline for strikes on Iran's energy infrastructure sites by 10 days, but we're still getting somewhat conflicting narratives from both sides on negotiations. The gold price also taking a little bit of a hit, bouncing off session lows there, but we've heard that Turkey's central bank adding to the pressure, swapping about 60 tons of gold worth more than $8 billion in the past 2 weeks against the backdrop of the Iran war. So that's heaping a bit of pressure on gold as well, although iron ore, Sherry, holding up reasonably well at the moment.
On top of the geopolitical risks that markets are factoring in, of course, we have the whole different narrative around the tech sector, right? So the tech sector in South Korea is one that we're watching. So do keep an eye for SK Hynix, Samsung Electronics as well, because now we have seen these two stocks soar more than 50% this year through Wednesday. But then we have the memory chip stocks sell off in the overnight session. That's continued the pressure after Google publicized research on a new algorithm that could allow more efficient use of storage needed for AI. So that turbo quant algorithm could actually reduce AI memory needs by as much as 6 times. So that's really being felt across the board. So even here in Japan, do watch out for Kioxia, for example, at the open. More ahead. This is Bloomberg.
الأموال الذكية تقرأ المشهد مبكراً وتسبق الجميع إلى أرباح ضخمة. مهمتنا أن نضعك على الجانب الصحيح من تلك المعادلة. معنا ستتابع توجهات أفضل مديري المحافظ وبنوك الاستثمار العالمية، وستستمع إلى محلليهم وخبرائهم مباشرة. تعرف يومياً إلى الاتجاه القادم للأسواق العالمية، النفط وتحركات الفيدرالي الأمريكي، وما إذا كانت بيتكوين والعملات المشفرة ستسجل مستويات جديدة. في جلسة المساء ستقرأ مشهد الأسواق العالمية بكل وضوح لتكون قراراتك مبنية على أسس صحيحة.
جلسة المساء من الاثنين إلى الجمعة 7 مساء بتوقيت السعودية على الشرق.
Press restrictions and internet blackouts have created an information black box around the U.S.-Israeli war in Iran. In the U.S., the Pentagon will no longer host media offices. A federal judge ruled Defense Secretary Pete Hegseth improperly revoked dozens of press credentials. Joining us now is Amy Sanders, John and Ann Curley, Professor of First Amendment Studies at Pennsylvania State University. It's really great to have you with us. Let's talk a little bit about this information black box that we're seeing around the Iran war. I mean, some people would say that these are extraordinary circumstances related to conflict, and it's really a security risk in a way. What have we seen in the past? And how does it compare to previous wars when it comes to these restrictions against journalists, internet shutdowns, restricted access as well?
So these really are unprecedented circumstances. If you look at Judge Friedman's ruling, he acknowledges that in the past, even when there's been conflict, we haven't seen the Pentagon treating journalists in this way, removing them from the premises, limiting their access.
How problematic is this for the future of democracy and for press freedoms? And does this set a precedent when it comes to how the governments around the world, and I'm not just talking about the U.S., we know what's happening in the Middle East as well, how governments in the world deal with media?
You know, I think it's extremely troubling because you could argue that this is a time when Americans need to know even more precisely what their military is doing, the decisions that the government is making. Right, the Pentagon is putting American military personnel in harm's way. And Judge Friedman acknowledged that journalists do their best reporting when they have access, when they can get accurate information.
Well, Amy, this doesn't mean that journalists necessarily give up. They just become more nimble. So to what degree does this mean the media is now left relying on more informal sources of information, such as leaks and drops, and how reliable is this?
You know, I think we've definitely seen that pick up, right? Since the Pentagon restricted access for journalists, our journalists have broken amazing stories, including what the U.S. has been doing in Venezuela, what's happening in Iran. You're absolutely right. Journalists are now relying on whistleblowers, leaks, and other information. It makes their jobs harder, but I'm happy to say that I don't think our national security journalists have let this stand in the way of keeping the American public informed.
To what degree does this kind of restriction create an environment to breed misinformation?
It definitely opens the door for other kinds of misinformation and disinformation to creep into the news environment, right? Certainly it gives the audience and readers, opportunity to turn to other sources. It makes it harder for trusted news outlets to get stories and inform their audiences.
Amy, how does artificial intelligence created content complicate this?
That's a whole nother wrinkle to this situation, right? We now have generative AI technology that allows average people to be able to create synthetic video and audio. And we have less resources for news organizations to be verifying that information, to be determining which of that information is reliable. And the average person these days can't tell the difference between authentic, verified video and audio and video that's created by generative AI. It's a really, really difficult information environment.
I mean, we have been talking about misinformation, disinformation, especially in the last few elections. This has been going on for over a decade, especially with the emergence of big tech. Now we're talking about potentially fake AI content. Why isn't anything being done at this point? Why isn't this regulated? And I'm not only talking about, and how do you do this, I guess, because you have so many different jurisdictions, and who takes over?
That's a really good question. The challenge here in the United States, of course, is the First Amendment. There's a significant amount of case law that protects false speech, and particularly false speech that is not made and distributed with people who know it's false. And so there are lots of parameters that sort of restrict how the government can limit speech. We've seen some states trying to take action individually, passing what they call deepfake laws, but those are all being challenged in the court as restrictions on First Amendment speech. If you think about it, when we think about parody and satire, often that can get looped in, right, in terms of people thinking about false speech. And so there's a lot of gray area there. In the U.S., the First Amendment gives us lots of protection, and we haven't yet seen Congress act in this area. So we're waiting to see what happens to the various state laws as the lawsuits against them progress through the courts.
If I could act as devil's advocate for a moment, in some ways, is it not advantageous for the Pentagon to act like a black box, particularly when it's trying to prosecute a war?
There's a difference between, I think, trying to prosecute a war and protecting national security and allowing journalists to do their job and serve as a watchdog over the government and inform the public about what the government is doing, right? Judge Friedman acknowledged that these journalists being in the Pentagon don't seem to pose a threat to national security. They're not releasing classified information. They're not publishing troop movements in real time. Those kinds of things would be challenging and could pose a real threat to national security. But I think having the journalists there to show the American people this is what the government's doing versus this is what they say they're doing is a really, really important check in a democratic society.
So as journalists try to bring more truth and facts into the broader public, and we're seeing this really tension with big tech, especially as they're also generating their own news content. Where does the balance lie in trying to regulate media against these big tech giants, especially when they're using also information based on past articles, news articles? We have seen all of that being fought in the legal system in the U.S., for example. When media companies right now, especially in the U.S., seem to be under more pressure when it comes to their revenue models being threatened, we're seeing more consolidation. Will this just become more problematic, or is there a way out?
I think there are a couple of things that we need to be thinking about in the United States right now. The first is that we've had a lot of large media companies buy up news organizations. And those publicly traded media companies have a loyalty to their shareholders. And oftentimes that desire to make a profit overcomes their loyalty to their news values. We've seen that with CBS, for example, right? Choosing to seek approval for Paramount's merger with Skydance rather than defending itself against a lawsuit brought by President Trump. That's a really unfortunate situation. The other challenge that we have in the United States is, of course, the First Amendment is designed to protect from government abridgment of freedom of speech and freedom of the press. And now what we're seeing is that big tech platforms are just as powerful, if not more powerful, in terms of regulating speech, limiting the kinds of content that audiences can access, using algorithms to push certain content up in users' feeds and other content down. And so that's a real challenge that news organizations are battling against, trying to get their messages out, trying to get that news out onto social platforms. So I think we need to start looking at how do we better regulate tech platforms and hold them accountable for the information ecosystem that they're creating.
Amy, thanks so much for joining us today with your insight. That is Amy Sanders-John and Ann Curley, Professor at First Amendment Studies at Pennsylvania State University. And you can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more, all in one place. You can check it out at bloomberg.com/videos.
Meituan ADRs closed lower in the U.S. after reporting its second straight quarterly loss as price wars continue to bite. Let's bring in our China correspondent Mingmin Lo in Hong Kong. Mingmin, Meituan's market share also taking a big hit.
That's right. Its revenue came in meeting expectations at about 4.1% growth, but the net losses came in worse than expected, 15 billion yuan or so in losses. And that's because, as you said, there has been intense competition with rivals like Alibaba and JD. After JD surprisingly entered the food delivery market last year, and Alibaba also entered the quick commerce market. So you can see the big decline in that revenue there. And this forced Meituan to spend billions of yuan in subsidies and promotions to defend its turf, and its market share fell from 70% back in 2024 to just 50% at the end of last year. And analysts are quite skeptical about whether or not it can recover the take rate there. At the same time, there's a lot of pressure from the AI front as well. The company has tried to improve its service by launching its own AI agent that would help with restaurant bookings and making orders, but it's not making such a huge pivot to AI or announcing ambitious spending to the scale of Alibaba's spending, for example. And for now, the company is focusing on using its overseas expansion to try to offset those losses, because Kita in Hong Kong had already turned profitable the previous quarter, and the company says its Saudi Arabia business could turn profitable before the end of this year as well.
Minmin, Pony AI earnings are disappointing as well. Its ADRs suffered in the US. Was there anything in the results that was encouraging around the outlook?
Well, what was encouraging, interestingly, Pony AI actually turned positive in terms of its profitability for the first quarter. But it's quite tricky. You look at its net income, it's a very positive number, but you dig into the balance sheet and you realize that the profit is coming from non-operating profit. It's coming from a windfall in its investment into More Threads, which is the Chinese AI company that saw its share price flip by 3 times or more last year. And you look at the revenue, it's actually growing steadily, which is healthy, but its operating expense is still 2.5 times of its revenue, so it's still making losses. The losses are widening, although the company says it's already achieved break-even on a per-vehicle basis in Guangzhou and Shenzhen. It wants to replicate that model to more cities. It's targeting at least 20 cities this year in China and overseas as well. So that's its path to profitability when it can achieve that economy of scale. It's planning to double its fleet to 3,000 vehicles this year, and it's partnered with Uber and a local startup to launch the first paid robo-taxi rides in Croatia as well, and testing is also happening in Luxembourg.
All right, Bloomberg's China correspondent Minmin Lo there. We'll have more earnings reaction from Pony AI on the China show later. Its CEO is going to join us exclusively then, with the interview happening at the Times there on your screen. RoboSense Technology has posted its first quarterly profit on the strength of new digital LiDAR technology. The company expects more growth as it ramps up expansion into the robotics business. Its CEO and Executive Director, Mark Chiu, spoke with us exclusively about its LiDAR innovations.
It's a huge revolution. It's similar to the film camera, to the digital camera. So under this strong architecture, the LiDAR's performance can get a great leap. So, under the traditional architecture, that the analog architecture, the resolution of the LiDAR basically linear at 64 to 128 channel. And under the digital architecture, it can be easily exceed 2,000 channel. And simultaneously, the cost have the unparalleled cost advantage.
Let's talk about where most LiDARs are being used still, and that's for ADAS or advanced driver assistance systems. Most of yours as well going into the domestic market in China. What are the competitive pressures that you've seen there?
First of all, let's talk about the ASP go down, this issue. And the decline in LiDAR ASP is not a bad thing, actually, but rather the result of our efforts. Our goal is to make LiDAR more affordable through continuously innovation, so that it can become as ubiquitous as camera. So the reason for the previous sharp drop in ASP is that over the past decades also, we have been fully committed to launching new architecture to improve performance and reduce costs. So we invest heavily in R&D for new platform architecture almost every year, so continuously driving down costs through technological improvement. So the result is LiDAR has been successful mass-produced for automotive application. The penetration rate is continuously raising. But as the architecture has now converged and no major transformation were occurred, in addition, almost all the subsystems has been chips integrated. Therefore, for mature application, I do not expect a sharp drop in prices.
What is the size of the discount that you're prepared to offer, do you think, for your ADAS products?
I can tell you is that it's not a sharp drop, and maybe like 10% or 20%, and it's not like a magnitude drop.
RoboSense is working on a range of different robotic solutions. Some of this includes with hands. Some of this includes with cameras, the sort of eyes of the robots as well. But which products are you most excited about?
I think we're looking for our next version of our haptic camera that will be launched at the end of this year. And I think in the next 3 to 5 years, it will become a large category that can compare or more than the LiDAR category.
And what's so important about active cameras?
With the active camera, you can easily to have a very high resolution and accuracy detection capability. Also, it can work the whole day, no matter it's the night and day.
So you are planning to go into mass production for the active camera toward the end of this year. What's the sort of the production target that you have?
So for this year, I don't put a lot of anticipate for revenue, but I think next year it will be surge.
CEO and Executive Director of RoboSense, Mark Chiu, speaking exclusively with Bloomberg. And here are some of the other corporate stories that we're following at the moment. Google has released new tools for its Gemini AI assistant that will let users upload chat history and context from other AI apps like OpenAI's ChatGPT and Anthropic's Claude. The company added a new import option so that free and paid users can upload zip files of their conversations with other AI providers and add it into Gemini settings. Google says the feature aims to quickly get Gemini up to speed and what matters most to users. Sources say SpaceX is set to hold briefings with prospective IPO investors in April. They say the company could hold investor meetings in the weeks after the Easter holiday. Bloomberg earlier reported SpaceX could file confidentially as soon as this month for an initial public offering that could raise as much as $75 billion. JP Morgan is planning a new fund investing in private credit that will allow investors to redeem 7.5% a quarter. The fund could also potentially offer monthly withdrawals. It comes as the $1.8 trillion market grapples with an unprecedented liquidity squeeze, with many private credit managers capping their quarterly withdrawals at 5%. We have more ahead on the Asia trade. This is Bloomberg. We're just minutes away from the market opens in South Korea, and these are the stocks that we're watching. Samsung Electronics, also SK Hynix, and some semiconductor-related names, given, of course, that we have continued to see the memory chip really sell off in the overnight session. Google publicizing research on a new algorithm that could allow more efficient use of storage needed for AI. And you can see right there the cracks that we've seen since the Iran war in the South Korean market, including the Korean won, weakening past that 1,500 level towards lows that we haven't seen since 2009. Bloomberg's Asia Equities reporter Winnie Su joins us now with what to expect from the market opens. Winnie, I mean, this chip sell-off has been brutal for South Korea.
Yeah, exactly, Sherry. We are also likely going to see that sell-off extending into today's session as well. You know, you mentioned a couple of factors, right? The biggest factor being that uncertainty around the war, and that the war is likely going to drag on for longer, and that's going to increase the expectation for inflation and push away the bets for the Fed's rate cut, and hence that's going to weigh on the tech sector. That's what we saw overnight. The stocks index down about 4.8% or so. So that's going to translate into the losses today. And adding to that, you just mentioned that new compression technique from Google researchers. Basically, that means the reduction of the memory sizes needed for these LLMs, which is some investors say that that's going to reduce the demand for memory chips. However, so far we've been hearing is that analysts expect this to actually drive up the efficiency in the longer term. So actually, it might be able to boost further demand. But for now, seeing a bit of a profit taking and a bit more sell-off just because how far it has run so far and these uncertainty for geopolitical tensions.
Yeah, it's been a wild week. Can you talk to us a little bit about how bad it's been for Korean and Japanese stocks? And is there anything else that we need to be watching out for today?
Yeah, I think especially for South Korea, we are looking at a monthly or a weekly decline about 6%. But when you take a look at how bad it has been since the war started, so monthly decline of 13% or so, and that's taking it to its worst month since September 2022. Similarly, for topics, we're talking about almost headed for the worst month since 2020. So lots of bearishness out there, and specifically for South Korea, yesterday the government was talking about stepping up these emergency plans, urging citizens to not to use less of these electricity. So we are watching out for further interventions from the government as well.
And it's really a difficult picture for South Korea, right? I mentioned the Korean won at that lowest level since 2009, which would make you think that perhaps Korean exporters could benefit from all of this. But at the same time, of course, the pressure is very much macroeconomically. So given, of course, those growth concerns in the country, what's the outlook for the broader markets there?
Yeah, exactly. So for now, you know, the interesting thing is that into this year, when we look at the year-to-date performance, South Korean stocks is still actually one of the top performing stocks globally. But when you look at just this month, it's actually one of the worst. So you can see that investors' preference for South Korean stocks actually has reversed quite a bit into this war. And for now, the near-term outlook still looks towards more of a bearish one. Also driven by just how volatile South Korean stocks have been. We're looking at the volatility index at its highest since November or 2024 or so. So that is likely going to make some investors take a step back.
Winnie Su, Bloomberg's Asia Equities reporter, with a preview of the market opens in Japan and South Korea. And of course, we do also have Bloomberg Tech Asia coming up in the next hour, so you don't want to miss that. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as investors continue to gauge where the Iran war is going. Paul, we have heard conflicting rhetoric coming from Iran and the Trump administration. President Trump now delaying that deadline to strike a deal for Iran by about 10 days. But we're still trying to understand where the negotiations are going.
Absolutely right. A lot of uncertainty around the negotiation picture between the US and Iran. Different stories depending on who you're listening to at whatever time. But not just the oil price being impacted, but we've had a fair bit of turmoil in terms of tech over the past 24 hours as well, Sherry.
Yeah, concerns about lower demand for AI chips, especially given that breakthrough coming from Google when it comes to a new algorithm that could make it more efficient for those storage needs. So we have seen the likes of SK Hynix, Samsung, for example, in the Korean session. We'll be watching here in Japan, Kioxia, and the impact on the broader tech sector. Of course, Japan also very much in the supply chain for those chip makers, especially when it comes to memory chips. And you can see the Nikkei and the topics opening to the downside. We are seeing the Japanese yen holding very steady at that 159 level, but remember, very close to that threshold that everyone watches for potential intervention coming from authorities. 160, of course, is that number. We're also watching the JGB space because we're now seeing short end yields at multi-decade highs. We're talking about the 2-year yield at the highest level since 1996, and more people pricing in a potential rate hike coming from the BOJ earlier than expected. In fact, for the month of April, more than 60% priced in already by the markets. You can see the 10-year yield holding at that 229 level, especially a lot to do with concerns about inflation and oil prices continuing to rise. Take a look at how Korea is opening, because this is another market that's very much exposed to Middle Eastern oil. And we have seen really the cracks emerging in this economy, battling higher energy prices. And we're seeing the Korean won. Take a look at that. More weakening past that 1,500 level. We're talking about the weakest level against the U.S. dollar since 2009. And the bright spots for South Korea were always those chip makers, and even that sector, as you mentioned, Paul, being hit by the headlines from Google.
Yeah, let's take a look at how the oil price is moving as well. We've just had Brent open, and it's continuing to nudge a little bit lower. It closed at 108. We've also seen that tracking prices in New York crude, which have been moving lower as well on the extension of President Trump's threat to hit Iranian energy infrastructure, pushing that out until April the 6th. So taking the pressure off a little on those crude prices. We have heard from a number of Fed speakers in the past hour as well. Governor Lisa Cook saying the inflation risk is greater right now as a result of the Iran war. Also heard from Michael Barr and Philip Jefferson saying they prefer to keep rates on hold as they assess how the war might affect inflation. Stephen Myron, though, with a more optimistic view, saying he sees inflation coming back to 2% in the next 12 months. Take a look at how treasuries are moving as well. The 10-year yield 440.37 at the moment. We did have 3 somewhat disappointing US government auctions in the last 24 hours as well, signalling investor fatigue with all of this market volatility. But inflation very much at front of mind at the moment, not just for those Fed speakers I mentioned, but also for the OECD. Let's take a listen.
We don't know what we don't know. I mean, we don't know how much longer this conflict will last. We don't know how much worse it could get. And I mean, there's significant downside risk, but there's also upside risk or upside opportunity. I mean, things could turn out better than what we're fearing.
Joining us now is Jasmine Duan, Senior Investment Strategist at RBC Wealth Management Asia. Jasmine, thanks so much for joining us now. And I think Matthias Cormann summed things up pretty well there. Look, we just don't know. So in an environment of uncertainty, how do you put capital to work? I mean, it's inviting, I guess, to sit in cash, but do you risk missing out on some opportunities here?
The situation is becoming more and more complex and problematic. It's really hard to believe what is going to happen. Therefore, we think it's really important to have a relatively defensive position of the portfolio. So at RBC Wealth Management, what we are currently doing is that we are overweighting U.S. energy and chemical sector. and then we reduce our positioning in the Asian equities at the onset of this conflict. And we think Asian economies in general will be affected more by the energy crisis. And originally we thought China may be more resilient than many believed. But if this war is prolonged and the energy disruption will lead to a global demand disruption as well, China will be affected. So we reduce our positioning in Asian equities. And our positioning in the U.S. energy was quite early. Actually, we increased our positioning in this sector early this year. And at that time, the market was talking about AI tech, and we think this is a sector that is very much overlooked by the market. So we enter at a very low valuation, and therefore at this time we are still overweighting U.S. equity through the energy sector. And if this war continues, we will still benefit from this position. And for U.S. energy, it will be relatively resilient because many of the U.S. chemical producers are relying heavily on the natural gas, and their margin could see expansion compared to their European and Asian peers. And at this moment, we are still overweighting gold and silver. We have been overweighting precious metal for a while. We took some profit at the end of last year. But at this moment, this is how we are positioning for the current crisis.
Positioning for the current crisis, but what are your expectations about inflation? Because you mentioned all of those calls around energy. At the same time, we're getting views that perhaps it might not be as inflationary as some fear. The likes of the Fed's Vice Chair Philip Jefferson coming out, the inflation impact of energy prices relatively modest. Is that what you guys are seeing too?
Many were expecting the energy crisis will lead to higher inflation. We do think that energy crisis, if it lasts for longer, even if the ceasefire is coming very time soon, the disruption to the global economy will last for 1 month or even longer. However, in terms of the impact to inflation, we think it might be more modest compared to what we have seen during the pandemic. At the pandemic, there are many different factors that is affecting the inflation. At that time, we can't spend much on services. Therefore, there's a huge appetite for goods. And there's a global disruption for supply chain. And however, this time around, we think the situation is slightly different. And based on our analysis, Asia and European countries will be affected more. And U.S. and Canada, the impact will be relatively small.
So then let's talk about some of the bright spots for this area, which was supposed to be tech, especially around semiconductors. And now we're seeing this breakthrough coming from Google that might mean more AI efficiency when it comes to memory. Will this make a huge difference?
We think the market sentiment is extremely fragile now. At the beginning, people think the tech sector, after correction in the fourth quarter, it is relatively safe. But now we are also seeing the correction in this sector. And one of the concern we are having right now is that many of the investment in AI or tech are coming from the Middle East. And if this conflict lasts for longer, we could see the investment in this area start to drop. And that could affect the whole AI investment and the whole AI capex spending in the U.S. And that's why we're seeing investors taking some risk off the table at this moment of time.
All right, Jasmine Duan, Senior Investment Strategist at RBC Wealth Management Asia. Thanks so much for joining us today. Well, President Trump is extending his deadline for Iran to strike a deal with the U.S. or face more attacks. He's given Tehran 10 more days, offering a brief calm to global energy markets.
They are begging to make a deal, not me. They're begging to make a deal. And anybody that saw what was happening over there would understand why they want to make a deal. They are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that.
All right, let's get to our Washington Deputy Bureau Chief, Laura Davison there. A lawyer, Laura, the president saying that Iran begging to make a deal, Iran begs to differ. How do we square this circle?
This has sort of been a dynamic that's been playing out, for the past several weeks, and even really since the start of the war, where, Trump has said one thing that, either he does or doesn't want to talk to Iran, or that he is or isn't talking to Iran. Right now, he's saying that he's talking with Iran, that Iran wants to make a deal, and that the talks are going well, and he's giving them more time. Iran has continued to deny that they are in direct talks, and they're continuing to fight, and they have, said publicly that the U.S. is negotiating with itself. Even most recently, Trump just said, Iran specifically asked for an extension to allow more time for negotiations. He gave them 10 days, even though they only asked for 7, sort of as a generous offer. Iran there are reports from the Wall Street Journal saying that Iran did no such thing. But this really kind of understands or underscores the dynamic here of that Trump is facing pressure domestically and politically to come up with some sort of off-ramp, some sort of deal. But it does not appear that negotiations are proceeding as quickly as he thought they might. He originally, last week, over the weekend, gave Iran a 2-day deadline, or else with the threat of strikes on energy sites sort of being the leverage he was using. He called that off after there was a lot of consternation that could lead to a lot of long-term instability in the region, in addition to sort of being a short-term escalatory thing. Gave them all this week, and even before that deadline was up, is now giving them an additional 10 days.
So what's happening with the U.S. 15-point plan at this point then?
That is really unclear. Iran has, rejected this plan essentially, and they have given some of their own points that they would need to come to the negotiating table, including having authority over the Strait of Hormuz. That is in direct contrast with what the U.S. wants, in addition to reparations from the U.S. to pay for some of the damage from the strikes during this war, as well as assurances that both the U.S. and Israel would stop their attacks on Iran and their allies. So this, kind of creates a really, complicated scenario. You basically have Iran on one side of the spectrum, the U.S. on the other side of the spectrum, and not clear that they're really making any advancements towards the center here. We're sort of seeing that sentiment, play out in markets, that, the thought that there could be some sort of ceasefire or peace plan in the short term, hopes are really waning there, and it looks like this may be a longer, more drawn out process.
Laura, let's complicate this situation even more, because we've got thousands of US troops due to arrive in the area within the next 24 hours. Do we know any more about what role they're going to play?
We don't. We do know that these are special forces. Particularly the most recently deployed group, the 82nd Airborne. These are paratroopers and other personnel that would be equipped to do some sort of special operation. The kind of in the range of things that the U.S. could do. We're specifically looking at targeting Karg Island, whether that be some sort of naval blockade of the island or a ground invasion of that. To essentially choke off Iran's oil infrastructure. Trump has also been very focused on securing the Strait of Hormuz, though it's not clear that the U.S. has enough of a naval fleet to really do that effectively when Iran is able to use mines and drones to attack ships headed through there. So this is, really causing a lot of confusion, essentially, of, the U.S. is talking about peace, but also really ramping up its military presence at the same time.
Bloomberg Washington Deputy Bureau Chief Laura Davison there with the latest on the ongoing war in Iran. This as we continue to watch the tech sector here across Asia as well. And you can see a sea of red right there. We have seen the downside pressure when it comes to memory chips in the overnight session as well. We saw the likes of Micron, Western Digital, for example, falling more than 7% in the overnight session, a lot to do with Google's new Turbo Quant algorithm that could reduce memory needs for AI by as much as 6 times. Now, Morgan Stanley says that the efficiency gains could lower costs and ultimately support demand, but we're seeing those concerns about demand immediately that are leading to stocks falling. Kioxia, that doubled in the past few months, is now down almost 10%. This is Bloomberg.
حين يكتفي الآخرون برؤية الأبعاد الثلاثة، نحن نضيف البعد الغائب، البعد الحاسم، البعد الرابع. لا نعرض الواقع فقط، بل نرسم التقاطعات، نقرأ في الزمن ونكشف الاحتمالات. لكن ليست كل الاحتمالات سواء، المعادلة الراجحة والاحتمال الأكبر يحسب بالوعي، يوزن بالمنطق، ويفهم في سياقه.
في البعد الرابع لا نعرض ما حدث ولا حتى كيف حدث، بل ما قد يحدث، لأن الحقيقة ليست مجرد خبر.
البعد الرابع من الأحد إلى الأربعاء 8 بتوقيت السعودية على الشرق.
Take a look at how chip makers across Asia are trading. The likes of SK Hynix, Samsung, Kioxia all seeing their worst day in about 2 weeks. We continue to see the sell-off in memory chip stocks overnight. Investors assessing the impact of a Google-developed technology that could reduce the need for storage in AI development. Let's bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. Mandeep, so how significant is the announcement from Google, or is this just fragility in the broader markets, especially given the run-up that we've seen in these chip stocks?
Yeah, I would characterize it more as the latter. I mean, look, it is a significant breakthrough in the sense like everyone has been looking to overcome these memory shortages. And, the fact that Google has shown the way for everyone to use this compression technique and, do more with less memory. And so from that standpoint, it is a good breakthrough, but, it doesn't warrant a 10% stock move to the downside simply because we know there is a big supply-demand mismatch in the memory market that is north of 30-40%. And so if anything, this probably will drive more usage and in turn more demand. So in the near term, it doesn't do anything to that supply-demand mismatch. And it's just that they will be more efficient with memory. And I expect all the other hyperscalers to use the technique that Google has shown in their paper. So it's a positive development like DeepSeek was last year when it comes to reasoning models. And I think it's going to pan out very similarly.
Mandeep, we've also heard from Apple saying it's going to be opening Siri to outside AI assistants. How significant is this announcement? What are the implications?
I mean, that's huge in the context of Apple, which has not spent any money on developing their own large language model, to be able to open their platform and, be able to connect with any of these powerful LLMs while maintaining the relevance of their app store and, Siri, which has never really worked in a big way. So from that standpoint, it sounds like a very good strategy that they still manage the distribution and hook up the best model. And I think most likely you will see Google play a big role. They've already hinted at a multi-year partnership with Google. But given the steep ramp up of Anthropic over the past 6 months, I think they want to go with the best model powering Siri, and that sounds to be a good strategy to me.
Mandeep, there's been a lot of concern about Apple really falling behind in the age of AI, especially when you're looking at an ecosystem that revolves around apps, right? If that whole ecosystem becomes obsolete in a world where everything is built ground up from AI, and then you have to compete with the likes of, say, OpenAI that also eventually want to bring their own devices to market, how big of a difference will this make, and what can they do at this point in order to accelerate those changes when at the same time they're dealing with this huge competition for talent?
Yeah, you're right. So there is that risk, and especially, when you see something like OpenClaw take off in such a big way, and now we are talking about agent-to-agent transactions, that's where there is a real risk of apps getting disintermediated. But look, I mean, right now, when I look at, the smartphone usage and how much data there is in those apps, it's very hard to, take everything out and drive everything in an agentic fashion. So that's the friction point that, these new LLM companies will have to solve for. But there is no doubt that there is risk, and that's why the series release is quite significant, and they want to move ahead with the best possible model powering that as opposed to something that doesn't see much adoption.
All right, Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh there. Ace Robotics, the latest venture of Chinese AI company SenseTime, says they're planning to go public in the next 3 to 5 years. The company has open-sourced a world model, and its chairman spoke exclusively with Bloomberg's Stephen Engel at the Boao Forum in China on when he expects to see scalability.
For the scalability, we expect in the coming 2 years, and we expect within these 2 years, we're going to collect, let's say, 10 million hours data. It's already 100 times larger than the current data we have. At that time, we have enough data, and also this data, they collected from many different scenarios. In terms of commercialization, we expect it's a first start from the 2B business. Because I know this people's expectation is that robots get into the home to help our daily life. But there's a lot of issue because if robot working at home, it have to accomplish a lot of complicated things, the long-term task, and also very important, the safety. So what if the robot hurt the elderly, the children? So far, the technology is not ready yet.
Who's going to survive? What is it going to take? What's going to be the quality of that product that's going to, because there's going to be a shakeout, there's going to be consolidations. Some players will not make it. Obviously, capital base is critical, the money to develop, but the technology is also important. And say in 5 to 10 years from now, what is that consolidation going to look like? Who's going to be standing, so to speak?
I think the company, the robotics company, which can deliver the hardware and the software integrated solution, and also focus on the kind of application scenarios. And these are quite important for their survival. And they need to deliver the products in mass production. They have the closed loop, business closed loop. And also the hardware quality is very, very important. Right. Because many companies, when they develop the robots, they don't really focus on the particular scenario. And they keep showing the capability of the robot instead of quality. Right. So probably after 1 or 2 months, there's a hardware problem. They have to be returned to the company to replace or to fix the hardware. So there are a lot of issues because the whole supply chain is not mature yet.
But the whole supply chain is in China, stem to stern. You have that supply chain. So that can keep costs down compared to an Optimus from Tesla, right? So how would your product eventually compare to an Optimus robot from Elon Musk?
I think that eventually we are good at the advantage we can take is many different application scenarios in China. So, the company and even the government, they're very open-minded. So we want to open a lot of scenario to try the robotics, and they give a lot of feedback, even the data to feed to the robotics. And I think this is going to the advantage. And also, of course, we can get into the larger scale and to make to cost down, to make the supply chain to really getting mature. So for Optimus, it's only the work for a single robotics makers, but in China there's a lot, and there's a higher chance for the company in the supply chain because they serve multiple customers, and it's probably getting quicker for they getting mature, profitable.
Ace Robotics Chairman Wang Xiaogang speaking with Bloomberg's Stephen Engel. And of course, we're headed towards the open in Hong Kong and mainland China. And these are some of the stocks that we'll be watching. BYD is one of them, which are on track for their best month in over a year. Surging oil prices amid the Iran war is brightening the outlook for the EV sector. Investors closely watching the EV makers' results and guidance for the current year. Due later for clues about the prospects of an export-led recovery. We'll also have more earnings reactions from Pony AI on the China show later. A CEO will be joining us exclusively then, with the interview happening at the Times on your screen. More ahead. This is Bloomberg.
تولد الشمس كل يوم، ومعها فرص جديدة للعمل والحياة، وطرق معبدة نحو المستقبل، وستائر تكشف أفقاً للنجاح. تدق ساعة العمل وتملأنا التفاصيل، وتتعانق في أذهاننا الفوضى والنظام. قد يتعقد المشهد وتختلط الحقائق وتتداخل الأرقام والقرارات، ونبحث عمن يدعمنا ويرشدنا إلى بر أمان ومصدر موثوق للمعلومات، لتعود مؤشراتنا إلى الاتجاه السليم، فنعانق الفرص من جديد.
مؤشرات الشرق، معي أنا محمد الصبري.
مؤشرات الشرق من الأحد إلى الخميس 11 بتوقيت السعودية على الشرق.
Get you across an alert on the Bloomberg terminal. Sherry, this is some Wall Street Journal reporting. It's understood President Trump weighing sending another 10,000 ground troops to the Middle East. As I mentioned, this is according to reporting from the Wall Street Journal. This force would likely include infantry and armoured vehicles, and it would be in addition to the roughly 5,000 Marines, thousands of paratroopers as well from the 82nd Airborne Division that are already on their way to the region. So this adds an interesting new dimension to the mix.
And it's really all this conflicting information that we're getting around the Iran war that's really putting markets on edge, right? Because we have heard from President Trump that they're in negotiations at the moment. The talks are going very well. He extended his deadline for Iran to strike a deal by 10 days. But already we know that the Iran war is just raging. More than 4,500 people have been killed in this conflict, according to governments and non-government agencies. So we'll continue to watch the repercussions there. That's it from the Asia Trade. Bloomberg Tech Asia is next. This is Bloomberg.